Morning, friends. It is Monday, February 3rd, and this is the 0DTE Morning Market Analysis. And we'll focus on the gap down that we had. But before we get to that, well, what the reasons are and all this other juicy stuff. But before we get to that, we're going to get to what we're here for, and that is to do our situational analysis on our out-of-the-money butterflies. And what are we going to do today based on all this increased volatility? It's really incredible. We love to see it. We love to see it. We are now in the Goldilocks zone. What does that mean? So what we do is we look at volatility to determine the width of our out-of-the-money butterflies. We also look at the directional bias based on where the situation is, and we also look at what our entry targets are based on market structure as revealed by the volume profile. So why don't we just get to it? And I will switch over to TradingView to take a look at the volatility situation. And yeah, here we are. Volatility's up 28%. We're up in the Goldilocks zone. We're now breaching 20 and climbing. So that means that we're looking at butterflies anywhere from 25 to 35 wide. I'm going to guess that we're probably going to be leaning towards the higher side of those widths. What we need to do now is take a look at the big ass fly and see if that will tell us what side of that range that we should be looking at. So we'll do that right now. All right. And we can see that the big ass fly is sporting a price of about $18. So what we do is we do an at the money fly. It's about as close as you can get. I guess we can go over to move it up. Let's see, move it down maybe 10 points. Let's see what that gives us, just so that we're centering that butterfly and see what price it will give us. So it's, yeah, so it's about $17. All right, so let's go back to our guide and see what that tells us on the range of our widths. All right, so $17 is definitely on the low side of the scale of debits, meaning that there's increased volatility. The reason why there's a lower debit, that means that there's higher profit potential for that day, and that's the result of delayed premium decay due to the high volatility that we're getting now, and that will be the subject that I'll talk about in a little bit. So that means that today we're in the Goldilocks 1 zone, so we're looking at 30 to 35 wide. I would say that I'm leaning to 35 wide. All right, so we have our width. Now let's look at our direction. That should be obvious this morning. We have a major gap down. This is the futures. We can see our directional bias is bearish, so we're going to be looking for out-of-the-money put flies. All right, next is to look at our market structure. I had to redo our market structure because we hadn't marked it up because we haven't been down this far. We gapped down more than, looks like about 110. Well, we were down about 130 points. We're down about 110, 120 points now from Friday's close. Or I should say here, even, yeah, from Sunday's close, or the Sunday open. At the Sunday, this is the Sunday open. So futures, just so you know, they open at 5, I'm sorry, I am really just fumbling with my words. They open at 6 o'clock Sunday evening Eastern time. And so from since then, we gapped down big time. That's a big, big, big drop. Let's see if we can put that into perspective by going to a bigger view here. And the drop itself broke major resistance or major support on this volume node here. You can see that we broke through on Friday and dropped down just below it. And then all of this represents low liquidity. You can see we call this the volume well. And then this would be our high volume node. Let me get a little bit more data in here so we can see the extent of what we're looking at. Let it just redraw here for a second. There we go. So we dropped from this volume node that was up here, this guy here, all the way down to this volume node and basically jumped the creek on this volume well, or jumped the well. from all the way down from this node all the way to this node. And we'll likely find support at the bottom of this node around 60.40. Well, it looks like what, 59. I'm sorry, 59.35. Wow, that's way down there. All right. Let's take a look at what that looks like on the 5-minute. And so we're looking for a put fly, and so we're looking to pull up into a resistance area and then continue down. You can see that the top of this node has been providing some pretty good resistance here. We just jumped right down to the top of the node and into it. These green lines are demarcating the top and bottom of the node. The red line is the top of the node, green line's the bottom of the node. So you can see that we're just bouncing back and forth here. So it's very likely that you have to take into consideration that these are also structural levels. But the way I look at it is this morning, we're probably looking for a move, something like this or this. So when that event happens, when we see that there's confirmed resistance, we'll take then an out of the money butterfly, put fly down below here. And typically we use a 10% debit rule. That means we end up with about a 1 to 9 risk to reward ratio. 10% debit meaning the debit of our out of the money fly will be 10% of the width. All right. So there's our situational analysis. We know we're going to be 30-35 wide. We're doing put flies, and we know where that market event is likely to happen, and when it does, we place our trade. All right, so let's get on to today's focus, and that is tariffs. You know, so what's the latest update on tariffs, and what do they mean to our zero DTE plays? So President Trump, he announced new tariffs, 25% on most imports from Canada and Mexico, with Canadian energy coming in at 10%, and a 10% tariff on Chinese goods. Now, these moves were aimed at tackling issues like illegal immigration and the fentanyl crisis. All he's basically saying is that, hey, you stop the illegal immigration and the fentanyl from coming in, and we'll remove the tariffs. But they're not reacting quite that way. They're in denial mode. But as you know, when policy shifts like this hit, the market feels it fast, and we certainly felt it. And Canada and Mexico are already firing back with their own tariffs, and China is preparing a challenge to these moves at the World Trade Organization. Of course, the World Trade Organization has little weight, I'm sure, in President Trump's view. So I'm not sure what that's going to do. Maybe they're going to try to mount pressure around the world. Everyone get behind China. Not likely to happen. It's a weak move. For us, the key takeaways here are increased volatility. As we saw, volatility has risen into the Goldilocks zone with about I should be showing that, huh? There we go. See, we're in the Goldilocks zone, right? And so we're likely to see bigger swings, and that's why we're going for wider flies. Premiums will be rising. That means that for us on butterflies, there'll be cheaper flies, more potential profit, lower gamma, and that's why we go wider. We'll probably see some reaction in various sectors like automotive and energy and the tech sectors. Energy in particular, because we're dealing with Canada. They are a big trading partner in terms of oil. So that means our usual zero DTE strategies are definitely going to be affected. So let us keep our eye. Man, I can't talk. I need more coffee. Hold on. Get back to the big head. Words just aren't rolling off this morning. I'm so excited because we've got a new surge in volatility, and that's always exciting for premium collectors. So anyways, that's it. Tariffs are the big news today. It's all over the mainstream media. And of course, they're spinning it their own way. But ultimately, what it means is volatility is up 28-30% for us, meaning that we can go wider and run into the fire. and make hay. Do you make hay when you run into the fire? It's probably a bad metaphor. But anyways, that's about it. Thank you very much. We'll see you tomorrow. Good luck with your trading. Coach Ernie out.